SmallCapSteve Live. I'm SmallCapSteve. Just me and Jay today. We're just going to have some fun. A few stories going on right now. Clubhouse being valued at $4 billion. Another communication app. I don't know. Tesla, the honeymoon may be over in China. Going to talk about that. Alan Brockstein's getting sued. I can't help but want to talk about that. Get into some Canadian small cap venture news. So buckle up. Let's get started.
Good morning, Jason. How do you do?
I'm doing good. I have to admit, as much as it pains me, I was never a fan of your whole we need intro music, at least when you're doing the introduction there. But that song you've played for 2 days in a row, I absolutely love it, and I think it's great.
Well, look,
sometimes you just got to toss in the towel and admit you're wrong.
Sometimes you just got to admit it, Jay, and I'm happy that you can admit it here. Look, let's start off at the top here. Our buddy there over at Investor 420, he has me blocked.
I knew you were going to start with that.
He has me blocked on Twitter, and he's one of those guys who's, I mean, you can make up your own mind. He discloses what he discloses, and but this is probably going to come across as us defending the guy. Oh God, Alan Brockstein is getting sued by what's this guy's name here? Let me pull it up. This is just
the guy's name is Justin Beck. He is connected to Cultivation Technologies Inc.
Okay, so Alan Brockstein, CFA, sued for alleged unfair business practices, conspiracy to commit securities fraud, aiding crime subject to the RICO Act, aiding plot to defraud the United States.
Intentional infliction of emotional distress, and injunctive relief to update disclosures affecting CFA neutrality. So, Steve, I'm going to be honest. I'm no fan of Alan. He's the quintessential, I'm not a promoter, or he hates promoters, but he is a promoter. You and I have talked about that at length privately. I'm not a fan. I'm not saying I hate the guy. Certainly certain things on his website, New Cannabis Ventures, is great. He's got some great data on the cannabis sector and everything else. And I mean, he provides a service needed in the space. I'm not here to shit on the guy by any stretch of the imagination. But this lawsuit, I mean, I'm no lawyer. I'm going to be honest on that. I mean, I went to business school, not law school. But this seems like an awful stretch of what's being said. It's genuinely hilarious to me.
Yeah, and just hold on one second here. I'm pulling up some of the screenshots that were sent to me this morning.
I've actually got that. I know what screenshot you're looking at. Here's the link.
Well, here we go. Just one second here. Let me just pull this up here. Where did I save this to?
Are you looking for the link? No, you got the actual.
No, this is a screenshot that I received of Justin Beck's.
I just sent you that link. That link. Yeah.
This is the guy who's suing Alan Brockstein, Justin Beck.
So here, I'll run through it. So, NCV Media, operator of newcannabisventures.com and 420investor.com, and its principal primary blogger, Alan Brockstein. I'm sorry if I'm saying that wrong.
I think it's Brockstein.
A chartered financial analysis, also known as a CFA, who must follow the CFA Code of Ethics and Standards of Professional Conduct, according to the CFA Institute, have been sued by the self-represented individual Justin Stearns Beck for 10 causes of action in Orange County Superior Court. Justin is also CEO of public health technology company Contact World and host of the award-winning podcast on iHeartRadio, Contact World, Truth in Health. This release is published in his personal capacity and not on behalf of Contact World. According to the complaint allegations, defendants Brockstein and NCV engaged in a long-term illegal scheme in California involving unfair business practices under California Business and Professional Code, blah, blah, blah. Violations of Securities and Exchange Act of 1934, conspiracy to commit securities fraud, civil conspiracy under California law to commit securities fraud, civil conspiracy under California law to commit racketeering subject to racketeering, influence and corrupt organizations, also known as the RICO Act, civil conspiracy to defraud the United States under California law, aiding and abetting securities fraud, aiding and abetting racketeering, aiding and abetting plot to defraud the United States, and finally, intentional infliction of emotional distress.
Like this is
it's something special. So the complaint cites Brockstein and NCV's solicitation for advertising services of plaintiff and CTI using CFA credentials in California, which was declined twice, leading to negative coverage of plaintiff and issuer. CTI. Defendants Brockstein and NCV allegedly declined to update its coverage following the May 2nd, 2017 article citing Dr. Mohammed Zakira in a broader conspiracy and aiding and abetting a scheme involving defrauding the SEC and a failure to cover 23 different enumerated material events that demonstrably show innocence of plaintiff and allegedly a lack of neutrality and objectivity of Brockstein as publisher. So basically what this guy is saying, now I'm summarizing it, it's my opinion only. Basically this guy is saying he didn't want to pay the bill. A negative article went out. That's not the... Oh yeah, that's May 2nd, 2017 article, which states Cultivation Technologies, Inc. sued for alleged fraud, insider self-dealing, and gross mismanagement. So apparently you can't write anything negative on someone without writing 23 different positive events. Like, so what this guy's saying, oh no, he's supposed to cover me for free because he put out one negative article. And to that, I say, fuck off.
Whoa. Is that's
the notion that this guy should get free coverage because he shit the bed. And then there's one line in here that I have to highlight. Let me find it. I believe tens of thousands of investors' rights have been violated and the city of Coachella was robbed of critical economic development and hundreds of jobs because I failed to pay Mr. Brockstein for advertising services twice. So he is literally blaming his entire failure and everything related in this release on Brockstein, not his inability to execute and do his job. It's all Alan's fault. Are you kidding me?
I'm trying to find that quote here. Where was it? Oh, there it is.
Right there.
I believe tens of thousands of investors' rights have been violated and the city of Coachella was robbed. Wow. That is
that there to me. That's like that should immediately just throw out the whole damn case. Like honestly, fuck off with that bullshit.
Yeah.
Like the fake guys in neutrality. I've got the article up here. I haven't read it, but you know what? This is live television. Let's read it. So basically, Cultivation Technology sued for alleged fraud, insider self-dealing, and gross mismanagement.
Where did you send me the link?
Yeah, it's I sent it to you.
Okay, here. Let me get it up on the screen for everybody. Here it is.
I'm going to do a high-level summary. Last summer, New Cannabis Ventures reported on crowdfunding cannabis company in California known as Cultivation Technologies, which made bold claims about a project in Coachella. It was touted as capable of producing $60 million in sales by the end of 2016. We also uncovered undisclosed issues with the company's CEO, Justin Beck, who had previously been subject to a 5-year injunction by the SEC due to a settlement related to a penny stock pump and dump scheme. Ooh. So this is a great start.
Is calling something a pump and dump scheme, is that legally what it would be referred to as under, like, in an SEC hearing? Like, or is Alan just kind of tossing shade to simplify what happened?
It might just be. I mean, he gives a direct link to the complaint if you scroll down. So, I mean, okay. Call it what you want, but I mean, the guy backs it up. Again, I'm no fan of Alan. Like, I want to be clear on that. This just seems like ridiculous.
We get it. You don't like Alan.
Like, I'm just saying, like, I might be biased the other direction, quite honestly, and I still find this absolutely ridiculous.
Because we run a platform where we write and we speak about publicly traded companies, and it's a little bit frustrating to see somebody getting sued over saying something negative about another company. But I honestly, to be honest with you, I follow the cannabis space and I've never even heard of these guys. Were you familiar with them?
No. And I mean, crowdfunding, to me, that's probably saying enough. So basically, Beck and his COO at Cultivation Technologies was sued by an investor who invested $55,000. And then alleged damages in excess of $100,000. According to the complaint, the defendants failed to disclose material facts and breached fiduciary duty with gross mismanagement of the corporation, self-dealing by the individual defendants, dilution of the stock, corporate, whatever.
Yeah.
But I mean, to say Cultivation Technologies was sued for fraud, insider self-dealing, and gross mismanagement, that's not wrong. Like, he's just reporting on someone being sued, right? Like, that doesn't mean I have to report on everything thereafter. Like, that doesn't make sense.
Mm-hmm.
That's like saying, oh, once upon a time, I covered a story on Canopy Growth. I now need to cover every single story Canopy Growth puts out from here until the end of the time, just so that I remain unbiased.
Well, the reality is that, you can, in America, you can pretty much sue anybody for anything. Doesn't mean you're going to win.
Oh, I know. But...
And that's kind of a frustrating thing about business, but let's move on here. I've had about as much of Alan Brockstein talk as I can handle.
Yeah, I hear you. I wasn't even planning on going on that rant. It kind of came out of nowhere.
Yeah, I brought it up, and you were definitely passionate about it, so I just let you run with it. So yesterday, Trudeau put out a budget, $101.4 billion in new spending. Hermina did a nice little summary here on the dive.
Hermina did a great summary on it.
Sort of looking at what's been happening after running what has been one of the largest deficits among all developed economies last year. Finance Minister Chrystia Freeland on Monday announced an additional $101.4 billion in government spending measures over the next 3 years to help the country fully recover from the COVID-19 pandemic. Prime Minister Justin Trudeau's government is potentially setting itself up for a federal election after revealing details of the budget that commits to big government spending on a number of new programs, as well as a major tax overhaul. The latest budget is expected to be met with debate over whether or not Canada needs additional fiscal spending, especially since the economy appears to be recovering a lot faster than previously anticipated. The full fiscal plan, a first in over 2 years, includes $101.4 billion in new policy spending over the next 3 years, amounting to an average of 1.3% of annual nominal GDP for the period. In the meantime, the budget deficit is expected to swell to $354.2 billion for the fiscal year that ended on March 31st and is projected to decline to $154.7 billion in 2021 and then fall further to about $30 billion by 2025. Similarly, government debt is expected to soar 51.2% or to 51% of GDP the current fiscal year before inching to 49% of GDP come 2025. So we can see some big COVID deficit spending there. Was there anything that kind of caught your eye in the budget? The one thing that I found kind of interesting that Hermina covered here, and this kind of speaks politically to a lot of the people that I know that kind of ascribe to or identify as sort of socialist and left, and the world's all teddy bears and rainbows. This comment here, I just found it kind of interesting. One of the major tax changes includes the introduction of a luxury tax aimed at high cost items such as cars, personal aircrafts, and boats. The budget anticipates the measure would generate approximately $604 million over a span of 5 years. If you've been lucky enough or smart enough or hardworking enough and I love that, if you've been lucky enough.
Yeah, because you just show up with this money. Sure, there's those cases. I mean, Trudeau is a perfect example of lucky enough. But I mean, for someone like you or I, Steve, I mean, I'm not saying I can afford a $100,000 car by any stretch of the imagination. But I mean, you and I work 15, 16 hours a day. That's not luck. That's hard work.
Mm-hmm. And
right? Like to me, that's just a fuck you to anyone that's achieved anything.
It's really unfair to the businesses who sell these things, like the boat.
Oh yeah.
Business.
But yeah, carry on with the quote there. Sorry.
But if you've been lucky enough, or smart enough, or hardworking enough to afford to spend $100,000 on a car or $250,000 on a boat, congratulations, and thank you for contributing a little bit of that good fortune to help heal the wounds of COVID and invest in our future collective prosperity, wrote Freeland.
Do you want me to go on a rant here?
Go for it. I can tell you're really jacked up today.
Shit like this drives me nuts. First and foremost, good luck taxing yourself to prosperity. The liberals are morons, and I've always maintained that when it comes to fiscal policy. Can you actually pull that up?
Yep, it's coming back up. Here it comes.
So, first and foremost, a $99,000 car remains $99,000. A $100,000 car now becomes $120,000 because that's liberal logic. You just apply a straight massive tax on something, and that makes everything better. The notion of, and thank you for contributing a little bit of that good fortune to help heal the wounds of COVID and invest in our future collective prosperity. One, if I can afford a $100,000 car, I've already done more than my share in terms of paying taxes because of the tax brackets we have in Canada. So already I've contributed more than my share fare. And invest in our future collective prosperity. Well, chances are if I have $100,000, I've generated plenty of tax dollars, whether that's through employing people or through paying massive amounts of income tax to the government. So the notion of, and thank you for investing in our future collective prosperity. One, like, it's not an investment when I don't have a choice of whether or not I can pay it out. Like, the whole notion of this is just a total fuck you to anyone that's working hard, and I hate shit like this.
Well, I think that the problem is that there's this common belief amongst people who tend to lean left and socialist people, and that they think that, oh, we can pay for all this. We just got to tax the rich more. Just tax the rich more. Just tax the rich more. It's like a $604 million over 5 years. This is going to generate what, an extra $120 million in tax revenue a year, and you're just pointing at one specific segment. Look, I got no interest in buying a $250,000 boat. I'm going to tell you something about boats, right? There's the old saying, there's two happy days of every boat owner's life: the day they buy a boat and the day they sell a boat. I got no interest in figuring out if that saying is true, because I already know it is. I don't want a boat. And I think cars are stupid. I was driving a 2007 Hyundai Elantra.
There's a great story behind that, by the way. The first time I went to see Steve, he pulls up in this Hyundai Elantra, and it's like an old jalopy, effectively. The thing's like, I don't know how it's moving. I go to open the door handle comes off in my hand. This guy is so cheap when it comes to vehicles. I had to put the door handle back into the car.
I actually don't really care that much about materialistic things.
Oh, I know you don't.
I like working. That's what's fun for me. That's where I get my utility. But the point that I'm getting at here is, there tends to be this idea that if we just tax the rich more, it's going to pay for everything. This amounts to this proposal based on their modeling, and who knows how accurate any of it is, amounts to $120 million of extra tax revenue a year. Well, look at this, Jordan, or Jay, or whatever you prefer to be called online. Jason, Jordan, Jay, admin. I don't know what you want to be called, but here's what I'm getting at. $350 billion deficit this year, and now we're going to go point at the rich folks for $120 million a year. That doesn't even make up 1% of this.
The best part is that doesn't factor in the potential lost GDP from instituting a 20% tax on this stuff. All they did, guaranteed, is they went, well, in 2019, before the pandemic, we sold X amount of vehicles at this price target or above. If we apply that now, we could make $100 and some million off of it.
You want to know a question I'm going to start asking? This is going to be a common question I'm going to start asking is, why do we feel this need to have a cheap dollar? right? Like why does Canada need to have a cheap dollar? Like why do we need to follow suit with the ding dongs down south who keep printing and printing and printing? Why does Canada need to, like
do we feel the need to have that cheap dollar? I mean, there's the whole exports thing, but last I checked, you still need lumber to build a house.
Yeah,
maybe I'm wrong on that, but you still need lumber, right?
I like
gas. You still need to drive your vehicle.
Yeah.
Might as well get on that while we can.
If we're gonna have a cheap dollar, then like the thing I don't like about this whole luxury tax thing is that I think that when you break it down, you're just gonna be punishing, companies that sell high-end boats. Like this is like they've just got targeted for, like, our business is we sell luxury boats to rich people, and we just got targeted. It's our job to pay for Christian Freeland's budget. But this is the thing is that a lot of people who are on the left, they don't understand monetary policy. They don't understand the consequences of everything that's happening, and how, I know people that are 35 that can't afford a home, that are all for high government spending, and they're working in the private sector, and there's no way that they can afford a down payment on a home, and they have no idea that the whole system's rigged against them. But
you know what the best part is? Like, I know what avenue you're going down, but I want to step back a bit. Consider the impact that's going to have on businesses. Think of long haul trucking and anything like that. I mean, everyone immediately thinks to that guy living in the mansion in downtown Toronto and everything else. But even here in Saskatchewan, I mean, if you want to buy a new pickup truck, it's not cheap. Right now, the Ford F-150 Limited, yes, top of the line. Luxury, no. That starts at $86,000. That's because inflation has gone nuts over the last several years, right? If you want that in a diesel so that you can haul equipment for work for the construction site, it gets even more expensive, right? Now, not all contractors are going to buy those expensive vehicles, but that's what I mean by it's going to have a material impact on GDP.
Mm-hmm.
Right? Like, they call it a wealth tax, but it's going to apply to any vehicle purchased over that price, not just by an individual, but by a business as well, because otherwise if I wanted to buy a $100,000 vehicle, I'd just buy it in a business. But that's going to impact people all along the lines, and it's going to impact automotive dealers and everything else.
Mm-hmm. So there's a story that I know you're going to love for us to cover here. And actually, sorry, before we move on, there's one little tidbit, and I bring this up because there's a bunch of, like, there's a couple, like, young guys that talk about real estate all the time on Twitter that they're supposed to be they're supposed to be subject experts, but they literally just flip flop depending on, like, what side of the
There's actually one other thing I want to talk about related to the budget anyway, so go ahead.
But they were all like, oh, the government's done nothing about housing. And it's like, yeah, they kind of did something. The federal government will introduce a 1% tax on the value of real estate owned by foreigners if the property remains vacant, effective 2022. The government estimates the tax will raise approximately $700 million within 4 years, while simultaneously addressing the ongoing shortage of housing across Canada amid a hot real estate market. Okay, I don't understand why this isn't like 5 to 10%, because
to be clear, what they're wanting is just those properties to be rented out, and then there's no tax. It's not if it's foreign owned. Like, all it is you're just someone rent it, right? Yeah. Because in Vancouver, we all know it's just emptiness.
So charge them 5 to 10%. Who cares?
Well, exactly. I mean, is it really going to impact prices that much? I really don't think it'll have much of an impact.
Like, we heard Adam Vaughn, he was on TVO talking about real estate, and he said, like, when we're in a room, if we ask by a show, they go down 10%. When they start thinking about the value of their homes, nobody does. And that's a bit of a problem. But sorry, what was the last thing on the budget you wanted to get into?
The last thing on the budget I want to get into was the childcare.
Okay.
And the reason I did is I put out a tweet this morning effectively saying the government is talking out of both ends of its ass, because it's saying it wants a national childcare strategy where it's $10 a day per kid. But at the same time is saying minimum wage, they want it $15. Now, I've got kids. I'm in rural Saskatchewan. I pay $30 a day for childcare, and I think that's an amazing rate. I'm over the moon with that price. Because I know that childcare, it's not just childcare, it's also the toiletries, it's the utilities, it's the food that they provide for lunch and everything else. So effectively, each caregiver would have to watch 13.5 children a day just to break even on the minimum wage front. So I know Quebec does this, but Quebec's also subsidized by the West. Let's face it, call it what it is. But don't worry, they balance their budget.
Sorry, what are they exactly doing with childcare? You say institute $10 a day childcare.
They want a $10 a day childcare program, a national childcare program. So it's $10 a day. So I think of, like, I'm in a small town of 300-400 people, and I actually go to the next town over. It's 10 minutes down the road for daycare services for my daughter. And like, that's fine and well, but how are you going to institute the same strategy there? So like, one, it just seems like a mess because I don't trust government to dole out any type of program responsibly in this manner without huge, massive costs. Two, it just seems unrealistic to me. Sure, Quebec does it, like I said. It's shown to be good for the economy. I get all that. The trouble is Quebec is heavily subsidized, and like $30 billion, is that going to be enough when right now, I mean, what do you pay for childcare? $50 a day in Toronto?
Yeah, my son just started we were in Toronto, and we were paying like $75 a day, and then we moved out to the suburbs, and then we pay $50 a day, and it's just like, hallelujah.
Absolutely, but even still, you think a childcare provider is going to willingly go from $75 a day to $10 a day per kid?
It's going to be subsidized.
It's going to be subsidized, and how well is that going to be provided? I mean, it's just going to be flat rates across a massive jurisdiction. Like, I imagine it'll be, like, for instance, in Saskatchewan, Regina, Saskatoon will be, you get $40 a day per kid subsidized.
You're missing the point, Jay.
That liberal logic makes sense. You're right.
Turn on them printing presses.
I'm saying we can't afford
program running. Sure, right? we can. That's my printing press noise. I don't know.
That's a terrible noise. But what I'm getting at is this government loves to spend money without actually making any.
Yeah. Look, all I'm going to say this is, and this is sort of just in general a problem with, you know, the dual working parent family. My sister was a lawyer in Hamilton at one point, and I don't know what she was making, but like she was doing okay. But then she had 2 kids, and like she was having a realistic debate on whether or not to go back to work.
Yeah.
Because
I get
2 kids to daycare was so expensive that it had a corporate lawyer. I don't know what type of law she does, but like having a discussion going, yeah, you know what, maybe I'm going back to work for like $7 an hour after I really break it down after taxes. So like, is it worth it? I don't know. Maybe I just stay at home with my kids. There is an economic argument for providing childcare, and I'm all for it. But then it turns into a much broader discussion over what do we actually want to put money to, and ultimately what do we want to eliminate, which is I suppose that's what a budget debate's all about. But I'm just not a subject expert on the topic matter. But I do think that they're like, at the very least, if you send your kid to daycare, that full thing should be tax deductible.
Yeah, absolutely. I mean, to be clear, I'm not against a national childcare strategy. I just think $10 is absolutely ridiculous. Like, at the very least, it needs to be a sliding scale based on income, right? It goes back to the same debate I had with the luxury car thing. You can't just institute a figure. It needs to be a sliding scale so that's appropriate, right? Otherwise, it doesn't make sense. And to me, this budget as a whole looked like they were just going after headlines and nothing else.
Okay, well,
which is no substance behind their economics. It's not surprising, but
let's move on.
Too political. Let's move on.
let's move on to one of your favorite subjects, China.
Are you just trying to get me fired up today?
It's topic after topic is geared at you today. I mean,
Oh,
I get a minute at the end of every show to talk about Blue Jays baseball, and the rest of it's just giving you topics to get fired up about. China state media calls for regulator investigation into Tesla's brake issue. Let me pull this up for you,
I was going to
Jason.
say, I think you've got a video or something you're talking about. I know nothing on this story.
I'll pull it up. There was, but just give me a second here. So a commentary by China state broadcaster CCTV calls for regulators' investigation into Tesla Inc.'s brake failures after an unhappy customer clamored atop a Tesla car in protest at the Shanghai Auto Show, creating a social media stir. Videos that went viral Monday showed Zhang wearing a T-shirt emblazoned with the words, "The brakes don't work," and shouting similar accusations while staff and security struggled to calm the scene. Tesla said the woman was a vehicle owner who had been involved in a collision earlier this year. It cited speeding violations for the crash, adding it had been negotiating with the woman about returning the car, but talks had stalled over third-party inspection. The CCTV commentary said the regulator could invite third-party testing agencies that both the customer and Tesla can trust to test the vehicles. Tesla is making Model 3 sedans and Model Y sport utility vehicles at its Shanghai factory. Last month, it sold over 35,000 locally made vehicles in China. Let me see if I could find the video here that actually breaks it down, because there's a tweet that kind of went. Let me see if I can find this here.
I mean, as far as braking issues go, I know Tesla has had all kinds of issues with just their mechanical systems as a whole. Not that the company itself admits to it, but I mean, we all know about the autopilot issues, largely just a beta test. Outside of that, they've got fitment issues on their panels. They've got issues with their suspension. I think Twitter calls them wonky wheels or wompy wheels or something like that, where basically a control arm is not structurally strong enough and sound to uphold the weight of the vehicle over a long period of time. But as far as braking issues go, I don't know that I've actually heard of issues.
Okay, so this is it. This is a female Tesla. A female Tesla owner climbed on top of a car's roof at the Tesla booth to protest her car's brake malfunction at the Shanghai Auto Show Monday. The booth beefed up its security after the incident. So this is it. Let's check this out. She reminds me of my buddy's ex-girlfriend.
That's funny.
Has Elon finally met his match? That's my question for you. Look, it looks like the honeymoon is not going to be
the
quite.
The honeymoon in China was very short-lived, and that's because their regulators actually seem to have the balls to go after the guy. It's like I said yesterday. I don't know what's holding things back from the numerous regulatory agencies here in the U.S. actually taking notice and doing something about all these issues. Like, sure, you can say things are under investigation, but how long do you need to investigate, and how many different stories do you need to hear before something's actually done, right? Like, Consumer Reports here is actually very good for that, wherein they've been calling them out a bit, and Elon's lost his shit on them more than a few times as a result. But still, like, it seems the honeymoon's over, and the shine seems to be wearing off the company a bit.
Okay, let's move on to the next topic matter. Clubhouse, $4 billion valuation ignores downloads in free fall. So this is from whatchamacallit, the Financial Times. Let's pull this up here. So we can see audio will be a first-class medium, claims Facebook boss Mark Zuckerberg. Private investors in audio-only app Clubhouse agree, quadrupling the San Francisco startup's valuation to $4 billion. Yet downloads are already collapsing. Investors should listen closely. The drop in demand is ominous. between February and March, Clubhouse downloads fell 72%, according to data from app analytics company Sensor Tower. Since late January, the app has gone from the 28th most popular among U.S. iPhone users to the 400th and to the 410th. Is Clubhouse? Look, I never really got into Clubhouse. I'm an Android user, and I think you are as well. But it looks like this Clubhouse is going to be a fad that was temporarily, showing up on many of our Twitter feeds. Some of us got it, others didn't, and perhaps it just is what it is at this point.
I've heard very little positive things from any Clubhouse meeting or whatever hangout. I don't know what the hell they call them. I've heard very little positive by way of substance of any of those meetings. Like Clubhouse seems to be what it is. It's a special club for a few, and once the shine wears off, who cares, right? Like you hit nearly 10 million downloads, and suddenly it's not really a Clubhouse anymore. It's just another platform. And then what are you competing based on? Right? Like, it was this big invite-only thing, but the problem is iPhone users account for, 15% of all smartphones, so you're getting a portion of a already small market.
So this is your installs: February 9.6 million, March 2.6 million, April 643,000. That's going to be really hard to get a $4 billion valuation when your growth is dropping that quickly. It basically went from...
It's doing like the inverse Coinbase.
Yeah.
Like, what growth story are you able to tell at this point in time now, right? Like, it's how do you keep people coming back?
Well, yeah. What you're going to talk about is how we haven't hit Android yet, and we've got millions of users coming through that. And look, I mean, if are active, there's certainly value whenever you have people's attention to monetize it, right? And that's part of which brings us into Q Media here. We might as well get into that next, talking about monetizing people's attention. And in Clubhouse's case, if people are actively using the app, even if it's 20 million users, I don't know how you value that, but that's clearly going to get a large valuation because you have people's attention means you can sell shit to them. Just like what we're doing right now. We're trying to sell shit to you. So let's talk about Q Media.
That was a terrible transition, by the way.
No,
it's like the cheesiest thing in the world.
Not really, because Q Media, they've just shown that they've actually grabbed people's attention, right? Like that's
no, sorry. When I say terrible, I mean cheesy, not actually bad. Like I see what you did there.
But that's the, like, Instagram didn't make any money. Facebook didn't make any money. Twitter didn't make any money. But you know what they had? They had people's attention. And that's really what you need right now to be able to go command a big valuation. And then you say, I'll monetize it later, which that's because initially there's a lot of skepticism with all these things, right? Like, there's a million people in the early days of Facebook going public going, yeah, they don't make money. They don't make money. They now generate tremendous amounts of cash flow to the point that it's probably the pendulum's probably swung too far on the other end of like, who cares about monetization? Well, you'll figure it out later. So anyways, Q Media, which is a stock I actually bought shares of the other day after they put out that news. We had Kurt on the show. I'm not going to talk about Q for very long because I think it's a tiny microcap out of Canada, but Kurt always comes on the show. I like the guy. I ended up buying shares the other day when that news came out at 33 cents. It went down to 31 cents. As I said on Twitter, I felt like a boob, but here we are. With great distribution comes strong advertiser interest. Did you write the story?
You don't like it?
No, it doesn't sound like a first sentence that you would write. It sounds like something that Herbino would write.
I will admit that I may have had a drink or two before sitting down to write this one.
There it is.
However, I was like, you know what? Like, QU has done great things. I mean, they've been a client for 2 years, call it what it is. But the ratings increase I've seen over the last few weeks has just been outstanding. And I mean, to me, that deserves to be recognized. They've been slugging it out, and they seem to have finally hit their stride. Getting PepsiCo, Mountain Dew, and others as advertisers, that's just great work, guys. Truly. Obviously, there's no financial details included because it's proprietary, and if they release it, it's going to impact future sales. And I mean, a name like Pepsi is going to demand a better price than smaller advertisers just naturally. But getting big name advertisers such as Pepsi, and Pepsi willingly going out and release and everything else. To me, that's huge, and it speaks to the quality of the advertiser they will now be getting. Of course, this won't be included in their December financials or their first quarter financials. Q2 and onward is really where things will start to look up for the company in terms of financial reports. So, I mean, we're running at a lag of like 6 months right now. But I'm excited to see the current quarter's financial results.
Well, I'm not expecting anything big out of the financials, so I won't be disappointed if they put up like.
Oh yeah. To be clear, I'm just looking at the growth and like what they can command compared with this new distribution they have.
Like I I don't want to talk about Q too much on this show, but like the numbers went from being like, oh, they're not very good to like looking at them going, I know a whole lot about TV rating, but like they're doing numbers that aren't that far off of like the top TV channels in India. Like they're crushing all like a lot of them are paid cable channels, and I think that this is free, but like it's quickly becoming one of the most popular TV channels in India, which I would have never thought they could have done. It does make some sense though, right? Like if you had a channel that had no commercials, that I could just like throw on in my house, it was America's Funniest Home Videos on loop 24/7.
I would love that.
I feel like I could put that on. My son would just, he's like we could all like good wholesome family entertainment we can have on in the background and have some laughs. So good on them, Kurt. Congratulations, you're working hard. Happy to see it. Voyager Digital, a name that we recently were talking about that I was kicking myself for not buying at 90 cents.
That conversation is actually why I covered this news this morning.
Well, you got to tip your hat to them. They real company doing real things, generating real dollars. So Jason, let's get into this one.
This was a very, very short story.
It's an MOU, which I normally scoff at, but
lottery.com is kind of interesting, right? So, I mean, honestly, there was no financial aspects discussed with it. It's an MOU, and I mean, their first paragraph of the release pretty well said all that was needed to know. Basically, they're looking to make it so that you can buy lottery tickets or lottery games with crypto assets, which might open things up to some interesting conundrums, but we'll see how it plays out.
Mm-hmm. Well, good on them. Let's move on to the next story here. Enthusiast Gaming to begin trading on the NASDAQ. I don't know anything about Enthusiast Gaming. What can you tell me about the story? And then let me pull up their most recent financials on CDAR, and then let's take a look.
Oh, you want to dive into it a little bit? So Enthusiast Gaming, they're in the esports space. Last month they announced that they're in partnership with TikTok. Had Q4 2020 revenues and net loss of $42.5 million and $6.9 million respectively. So I mean, they're generating some income. That seems high, actually. I hope that wasn't an error.
Okay, well, let's take a look here.
Let's take a look at it.
I want to play a game where I look at the financials and I tell you how much I would pay for this business. I have no idea what it's worth, but just based on the little bit that I know here. Okay, so they got $4 million cash with $22 million in receivables. That seems high. $106 million in goodwill. So right when I see the $106 million in goodwill,
you start to question things. Absolutely,
yeah. That's only reasonable. $220 million in total assets.
Plus, you include intangibles.
So that tells me before I even look at this thing, I'm expecting this to have a market cap in the hundreds of millions. Okay, now,
one second there. Cash, accounts payable. That's the one thing I look at. That's the very first thing I look at every time. It looks like they got a cash problem. Now, this is December 31st. We're now mid-April. They've probably done a financing. I don't know off the top of my head.
Mm-hmm. So let's take a look at revenue in calendar year 2020. They did $72 million in revenue, $18 million gross margin. That makes me wonder if there's something going on here. because that is a very shitty margin on something that you
Should be
think is
digital. I believe they host content or tournaments and stuff, so there could be some physical aspect.
This is the beauty of deal making, is that what you could do is you could find ways to grab top line revenue. Somebody messaged me about Skylight Health, SHG. Which
actually, let's talk Skylight Health after.
Well, just okay. We'll get into it. Okay, so $72 million in revenue. I'll say that this thing's probably trading at somewhere in the ballpark of 10 times. So 720 million, according to this, and there's 83 million shares outstanding. So probably somewhere in the ballpark of like $5 to $8 a share, based on that. I'm assuming that they've got like a bunch of guys from Canaccord who are helping work the deal. But share structure matters, how big's the float, all that sort of fun stuff.
You want the details?
Whoa, hold on a second here. This is why I don't like this business right here, and I don't need to go too deep into it. They lost money in operating cash flow. So this business, folks, does not make money. I don't give a shit what they say. They do not. At least in 2020, they did. That's a lot of money to lose in operating cash flow. Negative 16 million. You don't even want me to pay 500 million to $1 billion for this business? But that's where I'm betting it's trading. Again,
sorry. What number are you betting it's trading at?
I'm betting it's trading between 500 million to $1 billion.
Oof.
Am I way off?
What we'll call it 1.2 billion.
Straight at 1.2 billion? Straight at 2.2 billion?
1.2 billion. 1.18.
For a company that can't generate operating cash flow. So
$10 a share.
Wow. Doesn't shock me. So again, let's keep looking here. I want to take a look at that revenue in the accounting notes here. It's note 27. It's just buried down there. Don't worry, I'm gonna find you, little guy. A lot of notes in this one. So the majority of this the majority of this revenue is something they call media and content. I don't understand how they can have such terrible gross margins and not generate positive operating cash flow on $72 million top line revenue. How come this says the non-current assets? Oh, this is assets. So they don't really give us a whole breakdown here. We'd have to get into the MD&A to really get into this. But perhaps we can do that. Like this could be an interesting story for us to do an hour-long deep dive on, and possibly
absolutely maybe next week.
Yeah, kind of interesting. Okay, let's cover one last story, and then
Skylight Health.
Skylight Health. Let me find you covered it this morning, I take it.
I believe it's me. Yes.
Okay, let me see if I can find the story here. Oh, it was earnings, right? They put out earnings.
They put out shit earnings.
Oh, Skylight Health put out shit earnings? No way. Who could have seen that coming? Let's take a look here. Skylight Health posts 2020 revenues of 13.1 million, net loss of 9.5 million. Mr. Lutz Magoots, take it away.
Alrighty, so for 2020, they reported revenues of 13.1 million for the full year, which was a decline on a year-over-year basis from 13.4 million in 2019. On top of that, they saw quarterly revenues decline quarter after quarter to 3.2 million from 3.3 million. They don't actually give you the net loss. They gave you the net loss of operations, which was 5.8 million. Doesn't include all the finance and everything else that costs in there to do that. But that is what it is. So basically, this company, during one of the years where we most needed health services, saw a decline in revenue somehow. How the hell that happens is beyond me. But on top of that, not only did their revenues decline, they bought 6 new clinics in the year, and they still couldn't beat last year's number. So that's how much revenues declined, right? Like, that's a significant drop.
$53,000 in software revenue off of $13 million in top line. And this is a classic, we're going to, I call it revenue arbitrage.
Vend in your revenue, basically.
Let's look at my cash flow statement. They lost money in operating cash flow. The shares trade at what, like around $1 the last time I checked, give or take?
Yeah, this thing's valued at 183 million right now, and that's after falling 10% to $1.02.
Got a lot of cash on the balance sheet, which I'm guessing is earmarked for some sorts of acquisitions that the investment bank who raised them the funds probably is going to get to participate on some level within the M&A.
Bingo.
I've never understood this thing.
No, like it's a pile, right? Like everyone's expecting massive revenues, and they actually post a decline quarter over quarter and year over year. That's something special.
Something special, folks. Let's take a look at this chart here. They used to be called CBII or CB2 Solutions. CB2 Insights. Yeah. I don't really understand most of these telehealth companies, if I'm just being honest with you. But they've clearly got the right institutional backing that's helped hold this thing up. They're doing a good job telling whoever's buying it the story that this is a tech-focused company. Not to say that they don't have tech, not to say that they aren't generating some revenue with the tech, but if you're going to give them a multiple based on that clinic revenue that involves a tech multiple, probably you've got a lot's got to go right for that valuation to make sense for you if you're a retail investor and you're going to play here.
So despite the declining earnings, they actually gave guidance of $40 million for 2021.
But is that clinic revenue? Because what do I want to pay for clinic revenue?
Well, exactly.
Do I even want to
not
own
only that,
clinic revenue?
Just all acquisition based. It's not like they're improving. They clearly are not the best operators based on the fact that they added 6 new clinics in the year and they still posted declining revenue. So the per clinic revenue has got to be going through the floor.
Yeah, but they got Wall Street Reporter on it. We're gonna find the next hunter back on. Oh boy. Okay, so let's wrap it up here. What's going on at the dive this afternoon?
The dive this afternoon, I believe we have Frank Holmes on the Daily Dive.
Ooh, Frankie Holmes, he was on SmallCapSteve Live last week.
He was.
Yeah.
Outside of that, I believe Hermina's got a bit of a backlog of great content. The macro this week has just been wild, considering it's only Tuesday. I got lots of catch up to do. I couldn't tell you what's going out for the rest of the day yet. I've been busy training people, and it slows me down.
Well, look, it's you can see my son just woke up and he's yelling at me that he wants water.
I thought he was in daycare.
So he just came home. Why don't you do the disclaimer here while I take
yell
care
at
of my
your
son?
child?
Yeah.
So as a reminder, folks, nothing we do or say constitutes as investment advice. We are here for entertainment purposes only. We're just a couple of boobs, as Steve loves to tell us. And with that, thank you guys for watching. Steve's on mute, doesn't realize it.
You could have spent your last hour staring at any screen, any place in the world, but you chose to spend it with us. In case you were wondering, Carson did get his water.
I'm happy to hear that. You need to install a little water fountain.
So thank you for joining us, everybody. We will be back tomorrow at noon.